to understand a recession, it's worthwhile going through some of the common causes of them. The first reason is the rising of interest rates by the central bank, as we mentioned in the last video. If the economy gets too strong too quickly, it's very easy for inflation to get out of control, and as a result, the central banks have to keep a close watch on this and intervene if it needs to. The way they will do this is, as we've mentioned many times before, they will raise their interest rates, and the raising of interest rates also enables them to slow the economy down slightly so that it doesn't grow too quickly and get out of control in the first place. The second reason is due to businesses collecting too much inventory. This happens during expansion because businesses start to develop an over-optimistic view of the economy and expect much higher demand for their products. However, because demand slows down after the expansion phase, there's a buildup of inventory that causes manufacturers to cut production. This lowers employment and income levels and spreads to other sectors that are also getting affected, resulting in an overall slowdown. The third cause is due to asset bubbles. The bubble is formed when there is an irrational demand which drives up the prices for certain assets to unreasonable levels. This is usually due to herd behavior, where investors buy something just because everyone else is buying it too, rather than deciding on the purchase independently. Many past recessions have been caused by these asset bubbles forming and then selling off sharply when the market comes to realization. These sharp sell-offs result in a major drop in confidence level and seizes up the credit market. A good example of this would be the subprime crisis, where there was a major sell-off in the housing market, which resulted in the recession. One other factor to consider would be the effects of oil price shocks. Now, shocks in the oil price are a common hindrance to the economic stability and growth. Now, this happens because a spike in oil prices can end up cutting into consumer spending power and causes business costs to be higher. This then goes on to result in a recession. The final common cause is the fall in exports. Now, this happens to countries that are especially reliant on selling their products overseas, as this will definitely have a negative impact on their national income and their ability to grow. This was the cause of the recession that Japan faced in 2008, and it happened because there was a significant drop in exports following the financial crisis that was spreading around the world. As you can tell, there are many reasons for a recession, but some of these are fairly common and it's good to know them. After the recession, we have the trough, which we'll talk about more in the next video.